take no loss. I don't even know what it costs. I hit the ground and it go off. Yeah, hit the ground and it go off. Yeah, I can't take no loss. I don't even know what it costs. Yeah, I hit the ground and it go off. Yeah, hit the ground and it go off. Yeah, run it. Ooh, I really feel it's my time. Think it's my year. Yeah.
Good morning, class. Welcome to the morning show here on Stock Market TV. Spencer, Steve, JC, Alfonso with you this morning. Hope you all had a great weekend. We are back in the saddle. Big week for markets, for America, I should say. We have a thing tomorrow with a little election. And then don't forget, we actually have a Fed meeting later on in the week. So maybe some interest rate decisions. I don't know. We got some earnings later on, not so much today. Monthly candles, we'll talk about that a little bit today. JC maybe will tease his conference call tonight. That's for members of All Star Charts Premium. What else is going on? We'll have Mr. Kenny Glick on the show. We will have Larry Thompson on the show at 9. That's always fun. Talk to Larry. We'll have Jason Purz on the show a little bit later on. So busy day for us here. Let's get the show on the road. Smash that like. Yes, James. It is a nice day to make some money. Let's do that.
Yo, we back. Happy Monday.
Everybody have a good weekend.
Listen, if you don't like Mondays, that sucks for you. You know, like there's people out there who like really like hate their lives and they hate Mondays. Like I've
Mondays.
been looking forward to Mondays for at least a decade, more maybe.
Yeah, I like me a good Monday.
I like me a good Monday.
Mm-hmm.
Yo, how about Saquon Barkley yesterday? Holy shit, dude.
I can't.
Wow. That was crazy. Like, how does one person have so much control over so much speed and like body mass, yet, you know, wow.
He's really good.
You think?
Yep.
Listen, for someone who's watched as much football as I have over the last 42 years, man, that was some run, dude.
Pretty crazy.
Wow, that was explaining to a 2-year-old how football works yesterday. You know, I think he's understanding because I had the hat trick yesterday. By the way, family hat trick yesterday. All 3 kids puked. All 3. Family hat trick. I was waiting. I had like 3 hours left to see if wife puked. So we got the golden sombrero. You know, the elusive golden sombrero. But got the hat trick. All 3 done. Why
were they puking? Oh, they're sick.
That's what 2-year-olds do. They just randomly, you know, I mean, you'll see. You'll see one day. So anyway, two of them were down. Wife was down. So it was just me and 1 2-year-old watching football. So I was explaining to the kid how it worked. And, you know.
Somebody needs to explain to the Dolphins how to play football.
Hey-o.
Oh, can we just, you know, the Hurricanes are my therapy. You know, that's my, that's what helps me cope. Hurricanes look good, bro. Hurricanes look good.
What are they ranked number 3 now? Are they ranked number 3?
Nobody wants to talk to me about foreign currencies. Can we please?
No.
Can we please? Nobody wants to talk to me about it. So I'm just going to talk to myself about it.
I'm going to the Miami game Saturday.
I know. I'm so jealous. All right, go hit it, Spencer. All right, ladies and gentlemen, we've got some action this morning. Not in the Dow, though. Dow is literally flat, doing nothing. 42,200 for the Dow. S&P 500 futures, however, up 7 handles. That's 57.65 for the S&P 500. NASDAQ 100 up a smidge, 20,173. It's the 30-year bond futures ripping this morning, up almost a 4% on the 30-year bond futures, still at 117, however. Crude oil up big, almost 3%, 71.5. Copper up 0.75%, 440. Gold flat at 27.50. Silver flat at 32.75, which is quite impressive coming out of silver. With the volatility index still at 22, coming in this election tomorrow might be lifting that volatility just a little bit. Then you got the Bitcoin flat this morning, just under 69,000. Ethereum just under 2,500, pretty much flat on the day. Solana 164, up 1%. Binance up about 0.5%, 561. What a disappointment that Binance is. What a piece of crap. Total crypto market cap, Spencer Israel, 2.25 trillion, with the Bitcoin dominance hanging in there above 60%. Mr. Steve Strazza in the futures markets.
Yeah.
Before I get into what I think is the most important thing, what stands out?
You know, I thought that the market was going to pull forward some election gains, and it really hasn't. A lot of these breakouts that I think we got excited about, Bitcoin included, I don't know. I'm just thinking, I'm trying to think in a way like, how do we react when we come in Wednesday, right, after the election, based on where have we come from?
No, it's a good way to think about it, because it's not like, oh, what happens after the elections? It's like, well, how did the market get here? No?
Like at the index level, S&P rolled over pretty good last week. And if you look at the equal weight indexes, I don't know. I really don't
The
know.
S&P 500 so far this year is only up 20%. The financials are only up 25%. Communications as an index only up 28%. Not a single sector is down. The worst performing sector is up 7.5%, which is energy. Everything else is up double digits for the year. So, you know, I think when you're saying that the market is not pulling forward gains, you're thinking a little bit more short term, right?
I'm looking at the ranges in things like KRE, regional banks, hasn't resolved. Biotechs hasn't resolved. Flagship ARC index hasn't resolved, right? Like all of these things. Bitcoin hasn't resolved. I thought they were going to go.
Let's start with the bear case. Throw up slide 5. Let's walk through the bear case. The bear case is, I think, what Strazza just alluded to. Market pulled forward some returns. You know, there's no evidence that historically the market does that. Quite the opposite. When the market is strong going into the last 2 months of the year like this, particularly in an election year, it tends to be way stronger than normal. So like the theory that the market pulls forward returns, there's no actual data that backs that up. Now, that doesn't mean that it's wrong, right? That is still, in my opinion, the bearish argument is that the market, right? Even though there's no precedent for that whatsoever, that is still a valid train of thought. So let's go over a couple of bearish charts. Your high beta versus low volatility. So technology has been an underperformer for most of the year. Fun fact, I don't know why that's not getting talked about that much. Massive underperformer for most of the year, large cap tech. Small cap tech has been underperforming for 18 months. So small cap tech is even worse. So when you look at the high beta index, you know, 40-something% of high beta is tech. Then you got another close to 20% consumer discretionary. So 3/4 of high beta is technology and consumer discretionary, the types of stocks that you tend to see doing well in bull markets. So when you see high beta underperforming low volatility stocks to this magnitude, that stands out to me as not bullish. How bearish is it? That's another story, but certainly not bullish. Would you agree with that, Mr. Strazza?
Yes, I would. And high beta is another one of those indexes on that list I was talking about. It's got this year-long range. It looked like it was resolving. It's at its lowest level since, mid-September now.
Fun fact, don't look. Fun fact, don't look. What is the largest component of the S&P 500 high beta index? Don't look.
NVIDIA?
No, but close. NVIDIA is the 4th largest, right ahead of Tesla. You know what the largest is? Super microcomputer, SMCI.
Oh, that's stupid. That's terrible.
I agree it's stupid and terrible, but it's just math. You don't have to like it. It's the largest component of the high beta index. Now, with that being said, the high beta index is very equally weighted. So by largest performer, it's largest component, it's slightly higher.
Yeah, that's dumb.
I agree it's dumb and it sucks, but it is what it is. Standard & Poor's. Shout out to Standard & Poor's, by the way, who sent us a cease and desist letter because they don't like that we call them young aristocrats. Fun fact, no beef. I'm a shareholder of S&P Global, so I'm rooting for you guys. No beef. Love you guys. But I just want to remind everybody that S&P 500 made sure, the Standard & Poor's made sure to give investors in the S&P 500, which I am one, none of the returns in SMCI on the way up, none. But they made up for it by giving us all of the downside. So that's, shout out S&P.
Do we have to talk about another selection committee? I heard there were some moves in the Dow Jones Industrial Average.
Bro, they added NVIDIA for Intel. Who saw that coming? Who could have possibly seen that coming?
Correct me if I'm wrong. Is NVIDIA not jumping a couple other Mag 7 names? Like they did, right?
Who's left? Meta,
Google,
and that's it.
But aren't you sitting there if you're those guys at this point like, really? NVIDIA before us? They've been waiting forever.
I mean, but dude, this was such a no-brainer. We've been talking about it all summer. Like when they didn't throw up slide 2, Spencer.
Why didn't this happen last year?
Why didn't this happen 25 years ago? Here, throw up slide 2. So this is a chart that we shared in the summer because the Dow Jones, in their infinite wisdom, decided to kick out Walgreens and bring in Amazon. The next question is, wait a minute, Walgreens was in the Dow? Yes, in fact, Walgreens was in the Dow. So when they did not add NVIDIA and kick out Intel, we were laughing about it, be like, why aren't you kicking out Intel and bringing in NVIDIA? So this was a chart that we shared this summer with the returns since they added Intel to the Dow instead of NVIDIA. And as you can see here, NVIDIA's up, check my math, 281,500%, while Intel is down. Since then, and by the way, this is total return.
JC,
what
do you think NVIDIA's market cap was in 1999?
Oh, no, I just think it's funny. No, I know. Okay. No, I know. It's just funny. Tell me it's not funny.
No, they have a knack for this. Right? They really do.
They're good at what they do.
They really do.
I liked how they announced the change 25 years to the day that Intel was added to the index.
November the 1st.
November the 1st.
Did they really?
1999. A day that will live in infamy.
That's weird.
Is it weird?
And then, so what else? We had a little chemicals mix up too. Sherwin-Williams in.
Sherwin-Williams is in. Dow Chemicals out.
Yeah,
that makes sense. Good.
I guess.
I like
Fun fact, since we're on the subject matter, Mr. Steve Strazza, don't look. Who did Walgreens replace in the Dow Jones Industrial Average?
What year?
2018.
It's not Honeywell. GE.
Yep. Think about that. They kicked out GE, brought in freaking Walgreens, and then they puked it out at the lows.
Do a performance chart of that one. GE, baby.
Holy shit.
GE, back in business.
Yup. Okay, hold on. Let's get back to the bearish charts. You got to give people what they want. They love bear porn.
Hold on. One more for you. One for you now. When do they add General Electric back to the Dow?
You know it's coming.
How long?
Who do they kick out? They're going to kick out Honeywell again?
There's got to be somebody better to kick out. We kick out Cisco.
You're gonna kick out a tech stock and bring in another industrial? I suppose they could, because they kicked out when they brought in Salesforce, they kicked out Exxon for Salesforce. Yeah. What other industrial is in the Dow? Boeing. They could kick out Boeing and add GE. That's probably what they should do.
It. That's the move. That's the one.
Move. You kick out Boeing and you bring in GE. All right.
Boeing's got to go, actually. Boeing's next.
Boeing, Boeing, you're done. Sorry. Bye, Felicia.
What a joke. Boeing.
All right, get back to the bear porn. People love good bear porn, especially in bull markets. So here, go to the next one. So here we're looking at New York Stock Exchange Breath. These are the percentage of stocks on the New York Stock Exchange that are above their 200-day moving average. And there's nothing special about the 200-day. It could be the 197-day or the 206-day. You're going to get about the same data. If your stock's above the 200-day, it's probably not in a downtrend. So the fact that the S&P has continued to make new highs, we're not getting an expansion in breadth. Again, like the other one, not necessarily bearish, but certainly not bullish, right? Would you agree with that?
Isn't this more of a range chart? Don't you just want to see this in a certain range? Like, how are you interpreting this? You're not looking for divergences or anything here. There's not like a Is there a specific number that?
I mean, I don't have to look for the divergences. They're just there.
Yeah, but you're going to overthink that?
I'm not going to overthink it. I said it's not bullish. How bearish is it? I don't know, but it's not bullish. If it were to break all those lows from this year and make new lows, and you're seeing 52-week lows and the number of stocks above their 200-day, now that would be bearish.
This is just one of those things. I mean, you see it all the time.
What do you see?
This.
What?
A lack of confirmation in a breadth indicator when the index is making new highs.
Yeah.
Just saying.
Yeah, no, I know. And then go to the next one. Slide 8 there for the bear porn enthusiasts. Here's the one Dow Jones industrial average reaching that 161.8% extension from the late 2021, early 22 highs. Not a random level, number one. Yeah. Number two, how about that momentum divergence?
I think breadth is overall fine. Back to breadth, sorry. Breadth is mostly fine. I think there's really not much.
Nobody's saying it's not.
From a market internal standpoint. But some of these breakouts that failed last week, I don't like it. I think
what about the bearish divergence in the Dow Industrials?
Yeah, this is fine.
Are you not entertained?
No, I'll mark up some of those charts of the ranges I talked about. You want resolutions there. It's been all year consolidating some of these groups. It's time to break out. I'm waiting all my life for these ranges to break out, I feel like.
Can we go see, can we please throw up, let's get back to what's happening now. Slide 3. Yeah. So this is what's so last night, just minding my own business, got a house full of sick kids, watching football, doing the thing, right? Putting the kids down, putting the wife down. Everyone's asleep. It's just me, my charts, and I was listening to the Fetterman podcast with Joe Rogan, another boring one.
Hold on. And this is what you go to. You can look at any charts in the world. You can look at any charts, and you're like, I'm going to pull up a chart of the Mexican peso.
No, that's not how it was. The Mexican peso reached out to me. Right?
Yeah.
So when So I was just looking at the futures market at 6:00 p.m. Eastern time, like I've done every Sunday for as long as I can remember. Mm-hmm. And I'm looking and I'm seeing, all right, Dow down 100, then it started bouncing back a little bit. And then I'm just going down my list of things that are trading on Sunday night, which is not Tesla. I mean, I guess now they're trading on Sunday nights, but the big assets, right? And I'm seeing the dollar getting slammed. I'm seeing the dollar down 50 bips on the futures. I was like, that's not nothing for a Sunday night. Stocks off their lows, dollar getting slammed. I'm like, let's go see what's happening elsewhere in the Forex markets. And I'm seeing the Mexican peso up a stick, seeing the zloty up a stick, seeing euro, British pounds up 50 bips, yen up 80 bips. I'm seeing the Thai baht, Korean won, Philippine peso, seeing all of them ripping across the board. So then I'm like, okay, is JC just being dramatic? Because I got nobody to talk to on a Sunday night, and I'm just overthinking the Forex markets. So I had nobody to talk to. And then, I wasn't going to call you because you're busy on Sunday night doing your thing. Spencer with the wife, eating Chipotle, doing what he does. So you know what I did? I started a Twitter Spaces. Spaces. And I'm like, who wants to talk about Forex? I got 200 people in there thinking me ignorant, thinking they wanted to talk to me about Forex. Nobody wanted to talk about Forex. They just wanted to hang out. Which was cool. So I was like on Twitter Spaces last night by myself for like an hour, just fielding questions. It was lovely.
At what time?
Like 9:00.
So glad I missed this.
Like 9 to 10.
Yeah.
Yeah, but it was my Spaces. I hadn't done a Spaces in a minute.
Yeah.
All
right.
Usually I'm like listening to Spaces while I'm like, looking at my charts, and then sometimes they'll call me up and whatnot. But last night it was me, so I was the dictator. It was cool. People were so nice. Just people were like, "Oh, JC, what's up? Just chilling."
We had a great group back when we used to do. I don't even remember what it's called anymore.
What was it called?
Clubhouse.
Charts and champagne. Remember?
Oh man, we had a great group. That was so much fun. Missed that. We do Spaces every Tuesday, 11:00 Eastern time. JC.
So I love that I have, so I'm here looking at my Forex charts, nobody to talk to. My whole family's asleep. None of my friends give a shit. So, and I figured I'd be talking to you clowns all week, so I don't need to bother you on a Sunday. So I just got online and said, who wants to talk about Forex? And the answer is nobody. Not even the people there to talk about Forex wanted to talk about Forex.
I mean, you know that, though. But I like what you did here. I really like this was a good bit, right? Because you look at a chart of Dixie right now, it's been sideways for whatever, a couple weeks here, after just absolutely shredding higher from several weeks. And I think it's on rollover alert. And I think a lower dollar, or the dollar heading back towards the lower bounds of its range, and maybe interest rates doing the same, I think that is the intermarket kind of catalyst for higher prices into year end. That's it. I think the dollar is so important. So I do. I like this. Fantastic. Good work.
Dollar getting slammed, rates falling, dollar falling. See how stocks react. It's going to be a little shaky over the next couple of days. So, like, we probably don't want to overthink the action over the next couple of days. Is that fair assessment?
The dollar rolling over, heading back to the lower bounds of its range, is the best thing that could happen for stocks right now.
Yeah,
Election
probably.
doesn't matter.
What about the election being over? Is that not the best thing that could happen?
Election doesn't matter. It's got to be over. It has to happen. It's Tuesday.
I mean, it looks like it's already over. I mean, I don't know if it's over, but so let's just check in on the odds here. 58.5% on the poly market for Trump, 41. So that's
Is he trending up or down?
It's been trending up since the second. For a couple of days, it's been going up for Trump. Down for Kamala since the second. So it's about a 17-point spread there. And then on the call sheet, so that's on poly market. On the call sheet, it's a 10-point spread. Same thing. Trump's been ripping over the last couple of days, up to 55, and Harris down to 45. So 10-point spread there. And then on the predicted, you are looking at Harris had taken the lead. It looks like it's split right now on the predicted. So that's the closest one. So technically it's Harris at 53, Trump at 51, but pretty much even on the predicted, and then Trump by a lot on the others. Can you throw up the slide 4 there, just to remind everybody that it's not so much who the president is, it's the Congress that the market cares about? Zoom in there, Spencer.
Yeah.
It's the Congress that people want. It's the Republican Congress. The market likes the Republican Congress the most.
I saw
and it hates the Democrat Congress the most.
It likes Republican Congress with Democratic president. You could
That's
take it
the
one
best
step
case
further.
scenario is Republican Congress with a Democrat president, which by the way could happen if predicted is right and the Harris wins. And the Republicans right now by far and away are taking the Congress according to the betting odds. That's the best case scenario for the market is Democrat president, Republican Congress, best data we have. But it's the Republican Congress that's the common denominator. So whether it's the president is Republican or Democrat is less important. Yes, to your point, Democrats better historically, but it's more the Congress itself, right?
If you were to go back and look through those periods, right, and ask people, stocks did really well these couple of years, why do you think that was? You would go back and you would look, from 1988 to 1999 or whatever. There would always be something else that somebody would say, this is the reason why stocks did well, or that's the reason that they did poorly, or we had this war, or that war, the dot-com crash, whatever. Nobody's going to tell you, it's because there were Republicans in Congress and a Democratic president, so stocks were great for 2 years. Like, it's never going to be the thing that matters the most. Yet we sit here and we just obsess over it. I can't wait for Tuesday to be over. Really.
Yeah, I mean, listen, historically, the market does really well after an election. We're going to bring in Kenny now, but I just want to remind everybody what happened in 2016. I had just moved to California for this Trump election. We were in a bull market. We were buying stocks, obviously, because I don't know if you guys have looked, but historically, in bull markets, you want to own stocks. Like that historically is the better move versus selling them. So I had just moved to California. Trump gets elected. I'm in the Bay Area. People are jumping out of buildings. Like, seriously, it's the world's coming to an end. Market's going to crash. Volatility is going to go through the roof. Like, I remember like it was yesterday. We were already buying stocks, not because there was an election. We were buying stocks because it was a bull market, and that's what you do in bull markets. And then not only did the market not crash and volatility did not spike, as it turns out, 2017 was one of the greatest, least volatile years in the history of the United States stock market. So the lesson here is that people, investors, humans, take their eye off the ball during elections because they're worried about other things and they lose sight as to what is actually happening, and they're betting with their emotions and their heart instead of with their brains. And then so if you are mentally strong enough to be aware of those things and overcome your political bias, there's a lot of money to extract from those that are too weak to be able to accomplish that, right? There's money to take there. So it's our job as an investors to take their money because they're distracted over politics instead of what the market's doing.
Here's what I'll say. In all my years, I've never seen anything in this world that can poison a person's brain like politics.
Yeah. Some of the smartest people I know, I mean, they just go down the wrong path.
Yep.
It's like, it's like drugs.
Well, wrong to you, right?
What's that?
No, I'm just in general.
In general, it has nothing to do with me. In fact, I'm fortunate that I've never gone down that path, but because I've seen others do it and ruin their lives and careers because they can't get over it, like
I used to think the reason you're not supposed to bring up politics is because it was boring. And then I realized that was what I thought when I was a kid. No, don't talk about politics because it's boring. But then I realized, oh no, it's poison. Nothing good can come of this. Can we bring on Kenny, please?
Please.
All right, we got the Warlock in town. What's going on?
It's been a long time coming. They ain't come from my club, they tuck it. Putting up numbers, 99 pounds, and I still kept it 100. Hold up. Yeah.
Kenny Glick, a.k.a. the Warlock, a.k.a. Larry Zonka, a.k.a. the grandfather of day trading.
Yeah, let's talk politics. I'll tell you why it's completely awful. Is no matter what you say, you will inevitably offend somebody, and somebody will look at you and say, wow, I thought I knew Kenny until he said that. And I've had that experience with people, and people that I thought were truly, thinking one thing. And then I had these brief conversations with them, and I don't look at them at the same way because some people have said some stuff that I'm like, wow, that's the way you really feel about this. You know what? Maybe we don't have to get together every like 3 or 4 months anymore. Later.
But if you could unring that bell, would you want to ring that bell if given the choice?
Well, you know what? It's a lot of these situations are different. And again, some of my friends that thought they knew me are looking at me a little bit differently also. But if they're your real friends, you push right through. Acquaintances are one thing.
That's it.
And then there's friends.
Yep.
Yeah, but what about in the market? What about extracting dollars from those who can't overcome their political biases? Like the DJT, for example, was the best performing stock in the world over that month. The best performing stock in the world by a long shot. And there were people who just refused to get involved because they don't like the orange man,
Oh, listen, that's what's special about what we do, living in the nucleus of the market. All volatility is great. I mean, I was in the Bahamas watching the futures plummet on Trump being elected, and I was like, why? Why are they overreact? Why are they acting this way? And then, yes, like you said, it became one of the most complacent bull market moments for a very long time. We just kind of grinded the shorts and the non-believers. And then the non-believers, not about the Trump or the whoever gets elected. It's just the idea that the market generally doesn't go down. I'm a victim. Trust me, my friends, over any extended period of time, we're going up. So, but as far as I'm concerned, more volatility, the better. That's why I love earnings season. That's why, I'm sticking with just trading, and whatever happens in the next 10 or 15 days to the portfolio, I'm not worried about the QQQ because I'm looking 3 to 5 years down the road. I'm sure it's all going to work out, and like it always does. So, the bull market, the perpetual bull market continues to roll. But when you're living in the nucleus, every day is the greatest day of our lives. It really is. Friday was awesome. We crushed Carvana finally on the short, got my revenge on the root, got my revenge on the Carvana on the short. It did Jerry Orbach to some extent. And then you just wake up today and it's 3 stocks you never heard of, just ripping. Trump massively in play. Let me just show you the Trump trade. So here's the Trump trade. The blue.
Wait, I can't see your charts.
Yeah, hang on a second. Let me get it up for you. 1 second.
Yeah, Jack's talking about the 50% drop in DJT over the last 5 days. Yeah.
Sure.
It dropped.
Phenomenal.
Of course, it was up 300% in 30 days. That's perfectly normal.
Right. So here's the 20 days of its awesomeness. So I'll just scrunch it together. So what goes up must come down. And you're talking to someone who believes the market's rigged. I prove it each morning. So 5750, a massive number in the world of trading. If you know, you know. But again, half numbers and whole numbers, you don't know that's going to be a blow off top. But then it rolled over, broke the VWAP, and we got paid on the short. Once that happened, the blow off top, it's the same thing as the faux show bro. So they get the last guy in who believes it's going higher, and then it rolls over and breaks down, just like the faux show bro. It gets the last non-believer out, and then it leaves without you. So this stock has been the number one trading stock over the last 10 or 15 days. And it's just the symmetry here. I mean, you're a chartist. You can look at some of these charts and like, it feels so good. And then it goes right down, right into this morning. So here's the rigging, my friends. So the market opens up at 4 o'clock. The good platforms open up. The first tick is 31.38. Okay, it plummets back below the VWAP. Then you get your Kardashian bottom. Here's the faux show bro. So if you came in looking for a reason to buy it, and as soon as I saw it was down and I knew it already fallen from 57.50 to 27 and change, my first instinct is, when's it going to go up? So right here, it didn't exactly break the double bottom, but it holds, right? Hang on. There's the VWAP break. There's the Kardashian break. But here's the magic. It went to 31.38 on that candle. And that's the same exact price that it hit at 4 o'clock in the morning. So the rigging is already in there. You just follow the VWAP, and that's how you take low-risk trades instead of taking high risk. Buying it up here, you got to understand that the algos are waiting for you up there. Sell it to them just like they sold it to you before, and then it just comes round and round. And if we Jerry Orbach, it'll be phenomenal. This
What happens with the Jerry Orbach? You give it.
Well, now I'm looking to see if it doesn't hold the VWAP. You're looking for it to retest those lows again. So right now, it's what we call jiggling or shuffling at the VWAP. It's going to make its mind up. Right now, we're not in it. So once it makes its decision, if it breaks back below there, you're going to roll and probably test those lows. And then once again, this stock has been the best stock to trade because of the activity. You'll wash out those sellers again, and then they'll be on the wrong side. The shorters will have to cover, and the longs will get paid. And if this thing's above the high print today, you know this thing's going to be flirting with 35. If it breaks down, you're looking at 25, and then right back to maybe even 18. So this one is the number one stock trade. I mean, we've been watching this thing like a hawk every day. It's been phenomenal action. Phenomenal.
Jerry Orbach from the Bronx. Fun fact.
Nice.
Okay.
Shout out to the BX.
So speaking of the Jerry Orbach trade, Carvana, he took a couple of lumps there, trying to get the short off, and then we had to give up. But then again, there's the blow off top moment, rolls over, and now you got. And again, I'm going to show you on the 2 days where this is basically grabbing more data on the VWAP. Look where it closed weak that day, and then it closed weak the next day. That's signs that it's being distributed. So I look to short the stock again. Hopefully it pops and rolls, and then we Jerry Orbach the gap from the earnings candle. So I'm thinking we go back to 211.41, maybe even Jerry really Orbach it all the way to the bottom tick. I don't think we're going at 189.95, but I'd rather be short than long on the Carvana since the 250 got violated on the down.
I feel like we need a newer reference for this. Jerry Orbach died 20 years ago.
I'm old, Jerry. I'm old.
All right. Guys, hitthebid.com. Kenny's going through these trades live every single morning. Fair warning, if you're in there.
Before I go, we're in this ADN. Have no idea what it is, but we're back in. Again, there's always 3 of these crazy ones every day. They usually have 200 to 300%. They're always pump and dumps. Do not let these trades go against you. But here's the jiggle and the shuffle back above prior day VWAP, back above the 1 minute. Suddenly we're big fans, and we got 266, got us back to the high print, starts to jiggle, and I missed that big candle leaving without me, but now bought it again at 4 and change. 390 right here. So we're making this turn hopefully right now, and all these levels I'll show you when you come to the live room. You just place your stops at these pivot points, and your risk is defined, and hopefully this thing goes to $5.
Fair warning, if you're in Kenny's room, you will be tempted to quit your job and just trade with Kenny every day because he makes it seem that easy.
Yeah, Kenny, last thing, with what's happening tomorrow, I don't know if you heard, but there's an election in the United States. And then Wednesday is the day after.
If anybody's still undecided, you join the room. I'll give you. There's only a few left. I've given them all away. We're gonna have
VWAP, we trust. Don't be a dick. Vote Glick.
So,
Love it. If you're interested in Glick's picks, sign up for hitthevid.com and join Kenny every single day. But seriously, again, just last question.
yeah.
Because of the next couple of days, are you treating it any differently? Are you still looking to fade the pops? Are you still looking to buy dips? Are you still looking for that mean reversion? Or is there a slight change because of maybe elevated volatility that could dissipate? What are you thinking?
Well, the one thing I do change is I'll trade futures because there will be some
Good call.
chaos. There will be chaos Tuesday night, and again, the VWAP works amazingly on futures as well. If you trade, I'd usually trade the NQ futures of the ES. So again, if they wash everybody out and scare the hell out of us, and then we turn, I'm a buyer, and again, so it's going to be the same trade for me. So I'm welcoming the volatility.
Yeah, spot on, Kenny. That's why I asked. You're absolutely right. Yep. Make sure your futures account is ready. Yep. Good call, Kenny. You're right.
All right. See you, Kenny.
I'll see you in the room later.
Dude, can I just tell you a terrible story?
Yeah, and then I'm bringing on Larry Thompson.
And then we'll bring in Larry. Terrible story. So it's 2016. I'm in California. We're bullish because it was a bull market. So that's usually a good idea to be bullish during bull markets. And then the market is shitting the bed after the market is realizing that Trump was going to be the president. And so futures were down a ton. But I have then this was like 8 years ago. I had a personal rule where I don't trade under the influence. And it was late, and it's California, and it's late, and I was drinking wine. So like the market's shit in the bed, and I'm thinking to myself, do I go upstairs and put in a futures order? Like this is before you couldn't just do it on your phone. I'm like, and I thought about it. I was like, do I just go buy S&P futures? I'm like, I'll buy them tomorrow. I've been drinking. I'm not going to make bad decisions. Dude, by the time I woke up, that thing was ripping, man. So Kenny's spot on.
Yeah.
Have your, don't be drinking on election night like I did in 2016. And have your futures account open, ready to go. Yeah.
That was a wild night.
Good sound advice.
I'll never forget that night. That was a wild night from a market standpoint. All right, let's bring on today's guest, Mr. Larry Thompson.
Bring him out. Bring him out. Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
What's up?
Mr. Mary. What's up, my man?
How we doing?
Oh, just doing a little trading, checking futures market, seeing the bond market. Everything's moving. Everything's moving. Commodities, bonds, forex, everything but stocks today.
That's funny, dude. It's hard to follow Kenny. Kenny's so funny, dude. It has me cracking up all the time.
Dude,
I have
the Andy Dufresne pattern is now one of my all-time favorite patterns because of Kenny brought it to my attention, and he's spot on. Like that. That's such a great pattern.
That's funny. Yeah, I have some funny stories about the election too. It was my senior year in college, and I went to, bear with me, I went to one of the most conservative colleges in the nation. I was young and dumb at the time.
Which is what? What's the most conservative?
Yeah.
It's called Grove City College. They teach Austrian economics, Ludwig von Mises, Milton Friedman, through and through. So they don't accept any federal funding from the government. So they're able to teach what they want when they want. So pretty interesting. Let's just say it was the exact opposite.
What state is that in?
It's just north of Pittsburgh.
Got it.
So yeah, it's in PA. So cold winters. People like to drink. So when Trump won, I think the bar ran out of beer. So it was a pretty interesting experience for me. But yeah, I think the other thing that's big tomorrow that people aren't giving enough consideration, which I think is causing the majority of the volatility, is the NFL trade deadline. I think that's really what's doing it for people. Is just like, I'm looking at the Dolphins and wondering what they're going to sell to maybe the Chiefs. Like maybe we'll get Tyreek back.
Dude, don't even start with me. Thank God for the Hurricanes. It gets me through my weekends.
Could you imagine?
Dude,
yeah.
If the Hurricanes weren't this good, I'd just be ending my life right now. Larry, talk to me. What are we looking at? We're looking at twos. And are you telling me that the Fed does what the bond market tells it to do? Is that what you're telling me here?
The twos. What's up? 2 year. Yeah.
Is that Larry's chart?
No. Wait, where are you, JC? Slide
14.
No, 19.
Oh, that's slide 19. Oh, this is
yes,
Larry's.
I agree with you.
Futures and spooky Octobers.
Bond market does tell the Fed what to do. I agree with you completely there. But yeah, I think that first chart, Strazza sounded a little scared this morning. I think Halloween might have got him a little bit. I don't know if he watched too many scary movies, but the thing I just wanted to highlight in this chart is that I don't want people to get caught up in the data and the numbers and the years. I just want people to see the majority of times we've had great years, we've had spooky Octobers, right? So what I did here is I looked at January through September, where it's been greater than 15% on the S&P 500 index, right? The majority of those have actually had red Octobers. And then the overwhelming majority of those have had positive Novembers and Decembers. So it's one of these things like the buy in October, get yourself sober, fitting story here, but that also in very strong years, you get down Octobers, which helps reset sentiment for that year-end rally. I think also you have the election, and you were mentioning earlier, Strazza kind of mentioned the S&P rolling over a little bit. The S&P 500 has done this all year, right? It's kind of tried to break out, fake to break out, consolidate in a range, and then at that bottom of the range is kind of accelerated higher, even if you just slap on like a 50-day moving average. So I think the point here is you got to stay bullish in a bull market. And I think that's the piece that seems simplistic when you say it, and it seems so elementary in thought, but reality is it's the truth. Like the data supports it. You can slice it this way, you can slice it many ways. So I'm still being opportunistic. Instead of looking at the breakouts that aren't working, I'm looking to the breakouts that are working. And so that's kind of the premise here of this data is, hey, it's normal for October to look a little spooky, but year-end rally is super common.
But October wasn't that bad.
Agreed. Agreed. Agreed.
We're looking at, let's see, October
down roughly 1%. Agreed.
Yeah, S&P was down 1%. Nasdaq up less than Nasdaq was down less than that. Financials were up 2.5%.
Agreed. We're on the same page.
Yeah,
we're on the same page. I think it's just easy to look at it and look at the rising wedges on Twitter. Look that we're down a little bit, flirting with the 50-day, and get a little nervous, especially post earnings. Everyone expected a rally, and we didn't really get that. So I think that's just where you gotta continue to look at opportunity here. So that's just what I wanted to highlight with this chart. And then I want to talk through this high beta, low vol chart that you were talking about not being bullish. So I do want to argue this for a quick minute. The low volatility ETF, right, is comprised of mainly financials and industrials. Which
one? Low volatility?
What's up?
The low volatility?
The low volatility ETF, right?
And staples.
Financials and industrials. To me, that's
staples.
Well, and it's not defensive. So although
you
this
have
ratio
15%, the second largest weighting is consumer staples in low volatility.
SPLV?
Yeah. The largest weighting is financials, 22%. Consumer staples are 15%, second largest weighting.
What's industrials?
Industrials, it's not that big of a difference. It's 12% industrials. But in high beta, you're looking at high beta actually has a larger industrial exposure than the low volatility, believe it or not.
Agreed. But it's a percent. But
right.
Yes,
but the point is the industrials are a wash in the index. The bigger thing is
the financials.
The financials for one, but also technology and consumer discretionary dominate high beta, virtually non-existent in low vol.
For sure. So I think the piece of the low vol that I wanted to point out is that the fact that like financials being the largest component and it doing well when financials are doing really well. I like that context of this not breaking out, if that makes sense.
Yep.
So I like the context of that because if it was, like you said, if it was the consumer staples that were crushing on a relative basis and it was financials that were lagging, I would be a little bit more worried about this ratio. But because of the fact it's the financials, and I have some financial names we'll get into, this ratio doesn't really concern me. And then top and bottom pane here, these look fine, right? Like I don't see a breakdown in high beta. I agree, tech hasn't really outperformed too much this year on a relative basis, but like you've talked about already, you've had financials and industrials look really, really well. So that's just what I wanted to mention because I think the nuance of that is kind of important.
Yeah, for sure, understanding what's in these things, but I mean they got to get going, right?
For sure.
What about the Bitcoin? You think every year for election you get the little bit of a dip, you get that volatility, and then they rip after the fact? You think we see the same thing?
Yeah, I think Bitcoin is one of us. That's what I wrote about this weekend. I think it just wants this election over, right? It just does not
Nice.
care. It just wants the election over. And honestly, I wrote about it a little bit this weekend. I hope all of you can look at life similarly. Like, regardless of who the next president is, find a way to succeed, because that's what matters, is what you're doing to succeed, regardless of who your politician is. And so that's where I think this Bitcoin chart just highlights, look, we've had those dips and then he's had these consolidations, and it's really resolved post-elections. This coincides some with halvings, but hey, I think it also coincides with some of the fact that we have presidents who are going to continue to spend money, right? I think if you listen to anybody talk about what we know for certain in the election, is that the government's going to continue to spend money and try to maintain their power. So I think Bitcoin, that's a tailwind for Bitcoin.
Just because it's a tailwind doesn't mean it's going to get going immediately.
Agreed. And I think there's a big range, like Bitcoin. That's why it's a monthly chart, right? Because we got to zoom out and you got to understand the time frame that you're trying to analyze this on. So for me, what I'm seeing here is that, hey, if you zoom out and look at the monthly chart, give it some time, because it's not that bad if we see some short-term volatility, which is to be expected. Especially you look at some of Jason Fraz's work with Bollinger Bands. It's pretty much consolidated, and there's going to be an expansion. So just be ready for that move. I think it's higher.
Larry, I live in the United States of America. Why should I care what's happening in Argentina?
It's a great question. I'll give you two reasons. Two reasons I share this chart. One, we've talked about it for a while. I shared it last time I was on, so patting myself on the back because I have a little bit of an ego like every other human. Secondly, if you want to be political where it matters. That's the point of this chart. Be political in a system that's not the United States, that doesn't have a Senate and a Congress and all these balances and checks of power that prevent a president from having an overwhelming effect on the stock market. That's a blessing to me. Being in the United States, is the president can only do so much, which is how it was designed. But when you look at Argentina had a new leader in 2023 come in, and a lot of people like him from a macro perspective. A lot of people like him from a political perspective. They think he's pro-business, yada, yada, yada. Well, that's somewhere where you can actually have that kind of impact, and you can get things done quickly because you don't have the same government that we have in the US. So I think when people say politics doesn't matter when it comes to the market, it's the nuance of that is politics. Fortunately, the president doesn't have a great effect on the market, and that's by design. And so that's the piece I kind of want to see here and want to mention here, is that it's by design in the United States. That's not a bad thing. It's a blessing.
Yeah, it's not a bug, it's a feature.
Exactly.
Yeah, shout out to Congress.
And shout out to Argentina. I love chimichurri. One of my favorite things to make at home on a little steak, little flank or ribeye if you like fatty steak. I'm not a huge fatty steak guy because I grew up hunting, so I eat a lot of deer, so I just never really got into fatty steaks, but great. Chimichurri, my favorite.
Dude, my chimichurri, it looks like a chart of Peloton. Like, just for as long as I can remember, my chimichurri would just get worse and worse. And then I made that turn, and now it's breaking out to new 52-week highs. My chimichurri is on point, kid. It is on point.
Good.
You got to use high quality olive oil.
Yeah, that's
you got to cut
important.
up more parsley than you think. You got to use fresh garlic and throw in some red onions there. Screw what the Argentinians say. The little red onions in there.
Yeah, I don't mind a touch of red wine vinegar, but once again, it has to be high quality.
No, got to do the red wine vinegar. That's a key feature.
It has to be good quality. So,
all right, talk to me about these. You brought over some capital market stocks.
I did.
This has been quite the leader. It's been hard to be too bearish when you see these capital market stocks continuing to act well. It's not just the exchanges. You're seeing it across the board, but I know you brought some exchanges with you. Let's talk about them.
Yeah, so I think there's a couple things here. One is I'm not great at spelling, so it's CBOE global markets, not global markets. So that's one thing I want to point out here. So I didn't major in spelling, but
I was going to say that conservative school you went to, they didn't have English class there, huh?
Yeah, we didn't. No. English is a hoax, but no, I'm kidding. So looking at CBOE, the thing I would say here is, if you think about the theme of, I recently read Nate Silver's second book about risk, and essentially talks about the house versus everyone else. And I just think of CBOE as the house. I think of it like the insurance company of, the markets to some degree, and of the degeneracy you see around the economy and around zero DTE. And so it's like, I don't want to bet against that, because they win just by activity and by people participating. And those are the businesses that do really well. Like insurance over time does a really good job. And that's why Warren Buffett's heavily invested in the insurance business. So to me, it's betting on the house, and it's betting on the continuedness of the fact that people are going to continue to want to gamble with their money the way they always have.
I love that you're bringing up Lindsay's degenerate economy. So you got the options, maybe not obviously, but, in my non-expert opinion, seems like the option situation here is helping the Chicago Board of Options. What about the NASDAQ?
Similar story. I think all these are similar stories, right? Like, once again, bringing back thinking opportunistic in a bull market versus pessimistic. I'm not looking at the charts that are failing. I am, but the market has told me over time, in a bull market, focus more on the opportunities than the risk that presents themselves. You can still think through the risk. You can be aware of the risk. You can respect the risk, but you need to be swinging the bat. And so what we're doing here is I'm just looking at some of the ones that have already resolved higher, and then zooming out on these monthly charts, I see the ones that are consolidated and now are in these bases that look like they might break higher. And the NASDAQ is one of them. The other piece I will add here, similar to the next chart, is once you're looking at this monthly perspective, you can get pretty big candles. So then we zoom into the weekly, and like Morgan Stanley, pretty big monthly candle this past month. They blew out earnings and it looks really good. I'm not going to buy it right here. I'm going to look for that pullback that we might see. Like we talked about in October, you tend to see some of those pullbacks, or if we get this market volatility. And if I can buy closer to that breakout level, that's where my opportunity comes in these types of charts, because you have long-term sustainable businesses that do well in bull markets that might pull back into that long-term support. And that's where I'll look to add to some of these positions.
Dude, all-time highs in Morgan Stanley. When it comes to like people are like, oh, JC, what was the best monthly chart? Man, I hate to say it's Morgan Stanley, but it's got to be in the conversation. That's some base, dude.
Yeah, it's a lot of those financials, if you just dig through chart by chart, the financials, this bull market looks like it's just getting started when you zoom out and look at some of these monthly charts. Like Strazza's mentioning things can't break out yet. That's true. That's also another way to think about that, is there's plenty of meat on the bone. Like if we have where the Mag 7 correct, or people get caught up in the Mag 7, I love that. I love when the market's deteriorating, but there's breadth and opportunity underneath. That's when the CMT license becomes extra and handy. It's not when the Mag 7 are doing all the work. It's when you start to have dispersion. You start to actually have to do the work to see what stocks are going up. So that's
Larry,
what I'm looking forward to.
Why don't people do the work? Why are they so lazy? Why don't they like to look? Like people are like, oh, they just make things up and they don't even look.
They don't know.
They don't do nothing.
Because they don't know, right, Larry? They don't know.
Yeah, so I would say it's a balance of a lot of things. I think human nature is human nature. And I would look up Nick Saban talking about the natural state of a human is complacency. And you can believe that. It doesn't mean you have to be a pessimist, right? I'm a perma-optimist, but understanding the natural state of people is they take information at will. They take things in, and it's easier to not think, right? The difference between complexity and simplicity is not ease. So getting in shape is very simple, but it's hard. It's hard to eat in a calorie deficit. It's hard to put weight on the bar. It's hard to go run and have your lungs hurt and be sweating. And so I think it's just the fact that it's hard to do the work. And so it's easy to take data and see it online and have it conform to what you already think. And these are biases that we have. And you have to take advantage of those, not because you're some bad person, but that's what you do. It's not your job to change the way people want to interact with the world. It's your job to capitalize on it. Once again, you want to talk about Austrian economics. Famous quote from Ludwig von Mises is like, if people wanted to read more Bibles, people would produce more Bibles, but people want to be at strip clubs. So there's a lot of strip clubs. Like if the strip club business was doing poorly, there would be a lot more Bible manufacturers and a lot less strip clubs. Like that's just how things work. And so you just have to be opportunistic in that. And you can be optimistic while also understanding some of the natural surroundings of being a human.
What about the energy chart? We skipped over that energy chart. Curious to hear your thoughts. Energy up big this morning. Like I said, energy, commodities, forex markets, bond markets, everything's moving today except for the stock market. Is energy ever going to get going?
I don't know. That's kind of the point of the chart. I think energy, once again, you want to go back to human nature. Energy is the first derivative source for production in the world, right? You have to extract the energy, right? And then the cost of extracting that and producing it is then going to be a ripple effect in the rest of the economy. So the overthinking and the big brain, ego-driven engine around energy is once again something I want to exploit, because there will be 200,000 articles written today about energy's move and how it's inflation. But I wrote in early July, I was like, if energy's below 95, everything's a snooze fest. And one of the reasons I say that is if you take this chart and you run 10-year yields against it, you look at the 10-year, it coincides with one another. And I think energy leads yields. So if energy isn't going to break out, you might have ramifications of these inflationistas that just think inflation is just going to continue to rip the economy. They might be wrong. Why? I don't know, but I just know energy probably has to be breaking out if we're going to have the same type of inflation we had in the past, in the 2020, 2022 timeframe. So that's how I'm thinking. I'm not overthinking it because it's a hard thing to do. I think if you do want to overthink it, you could think about uranium and the base in the uranium chart. And what if uranium starts to capture a lot of the energy consumption and it's more efficient than fossil fuels? And you don't know about that for 2 years, right, JC? So like price leads those market narratives. And so if uranium breaks out and then energy starts to correct or trade sideways for another 5 years, then we'll start to see the magazine covers that are like uranium, saved inflation, right? That might be the thing you see. I don't know, but I'm just saying that could be a headline we see because these data center companies, Microsoft announced this data center is going to be powered by nuclear. Once these corporations give that stamp of approval, they're willing to take risk in those markets, and then they're rewarded for it, you're going to start to see all these companies talk about uranium. You're going to see uranium. You'll probably start to see uranium tickers in these crypto names, right? We'll start to see nuclear Corgi uranium coin, right? So I think that's how I'm thinking through it. Is I'm just not overthinking the inflation and the energy until we see a sustainable breakout. I do know it's a long-term
question.
uptrend.
I got an important question for you, my friend.
What's up?
You got a lot of letters after your name.
Yeah.
Which are the more important sets of letters after your name, in your opinion?
Obviously a tough question, right? I'd probably answer it politically. If I didn't get the first three, if I didn't get my CPA, I wouldn't have gotten my CMT. So I think the CPA was more important to getting my CMT, which I think is more important. So I'll answer it politically.
No. That's a good answer because CPA is really valuable. Same thing with the CFA. People are like, oh, JC, when I get out of college, should I go take my CMT? I'm like, honestly, if you're a young kid, I'd get the CFA first, right? Or CPA. If you're a CPA, the CFA is going to be real easy for you, or a lot easier because there's so much accounting in it. So it's like the cheat code to the CFA is being a CPA. None of them are fun, by the way. They're all miserable. The CMT is actually enjoyable to study for.
Yeah.
Would you agree with all that?
I agree. And I'll give you the quick and dirty, just a quick anecdotal example. Got my CPA. You think accounting's black and white. You think you're going to walk into these companies and every person working on these financials that are so important are going to have articulate, expensive, complex, robust systems. And what happens is humans are involved in those systems. There is a person paying the bill for that company to be there. There is a guy who's working late at night that has a kid that he just had, and he might be quickly going through those numbers, quickly going through those financials. And so I think what the CPA did for me is taught me there's a lot more human nature element to everything in this world than we think. Because we like to think, oh, I think about politics separately. I think about economics separately. I think about investing separately. And sure, you do, but not everyone does, and not the majority of the time. So what it taught me was that human nature element and how the market actually works is different than theory, right? That Yogi Berra quote that you like to reference, two different things. And the CPA really taught me that what's in theory isn't always what's in practice. And the CMT tells you what's happening right now. Like, it's just objectively, this is what's occurring. So take that information with less of a grain of salt than you do this theoretical information that came from an earnings report or from a forecast that was put together at 4 a.m. because someone had a car accident and someone else had to fill in for them. So it's all those types of things that the CPA helped me learn that gives my CMT so much more validity and respect for myself.
Shout out Larry Thompson.
That was great.
Shout out. Chat's loving it. You're the man, Larry. Thank you for coming by.
Thanks, guys. Y'all have a great day.
Appreciate you.
Go Chiefs.
Larry
Oh, sorry, Larry.
Thompson. Very, very wise for a young man, right?
That was a great take, I think. And a lot of things are like theoretical, right? And then you get into the real world and you realize, oh, it's not like it was in the textbook. Why is it not like the textbook? But that's just the way
Because the
life is.
textbooks were written by authors of textbooks, not by anybody who actually ever did anything.
Or they were written in textbooks from 30 years ago when maybe it was a little bit more like that, but things change, right?
My brother-in-law's getting his master's right now, and he's taking like an economics course. So he like sends me text messages of some of this stuff. I'm like, they're all lying to you, these sick bastards.
Well, that's how it's supposed to work. It doesn't always work that way, right?
Larry Thompson, shout out Larry Thompson. Steve, I'm gonna hop. Try not to get us canceled. I got our conference call tonight. Premium members of ASC. I will see you there 8 o'clock tonight. 8 o'clock. The most important monthly chart strategy session in a generation.
Wow. You heard it here first.
So I gotta go get my shit together. Guys, Strazza, if you would like to participate in this evening's conference call and provide any charts that you think the folks over at All-Star Charts Premium might appreciate, feel free to fire them over, all right? And if not, that's okay too. We got plenty.
Goodbye.
Adios.
Is that funny, Spencer?
JC sends a Slack message at like on a Sunday night, and he tags like Steve and like the whole. He's like, "Send me charts." It's like Sunday at like 8 o'clock at night. It's like, who's gonna send you charts on Sunday night?
He had
Sam and Rick already sent me their charts, so
I'm just saying. I saw the message and I was like, who's gonna do this now?
just Alfonso alone probably sends him 200 charts. He has more charts than he could ever possibly need.
Yeah, I saw that and I laughed. I chuckled to myself. I thought it was funny.
Never a shortage of charts.
Dude, I saw a lot of stuff this weekend about Warren Buffett preparing for the recession. Did you see? Were you online this weekend?
Big cash.
Did you see this?
Big cash pile. So what happened was a little bit of background here because Warren Buffett is back in the news. There has never been an investor who is covered more closely in terms of his buys and sells, and the latest 13F was just filed for Berkshire Hathaway, I believe Friday, was it? So last time Warren Buffett had this high percentage of cash in his Berkshire portfolio, the stock market immediately went on to have the greatest 52 weeks in American history. The time before that, the bull market in stocks lasted for 3 more years. JC is putting this all in the chat right now.
Yeah. No. Okay. So here's the thing. So Berkshire had earnings, right? And as part of that earnings report, they update investors with what they did last quarter in terms of their stock portfolio. Yep. Berkshire's been selling Apple for a few quarters now. They sold more Apple even last quarter. They sold their Apple stake by 25%.
They sold a quarter of it.
Yep. They cut it in half in Q2, and then Q3 they cut it by 25% again. They also kept selling more Bank of America. They reduced that by 20%. So anyway, bottom line here is they now have a cash pile of $325 billion as of the end of September, right? At the end of the quarter. So
much cash.
I saw a lot of things about this cash pile. What does it mean? It must mean he sees a recession around the corner. And that's why it's the only explanation as to why he's doing this. And a lot of this I was on LinkedIn yesterday for some reason. I saw a lot of stuff there, but I don't agree with that take at all. For the record, I'm just sort of putting it out there that's what is out there. And I know you don't agree with that either, but
they should buy Bitcoin.
It just means that he doesn't see a better use for it right now. And he talked about this in May at the annual meeting that they've made an insane amount of money on their Apple investment. They've been selling, right? And the Apple, their allocation to Apple was actually, I think, increasing due to just the capital appreciation of the stock. It's not anymore, but it was.
Here's the thing about Berkshire Hathaway, Spencer. They don't claim to be, and they never have been, experts at market timing.
Nope, not what they're trying to do.
Exactly right. Right. They're excellent at buying things and holding them for very long periods of time. Right. And recognizing big gains over the long run. That's what they're good at. They also don't nail every trade or investment that they make. We know this very well because we watch them. We watch all of their moves. In fact, this Occidental Petroleum situation, which has been their biggest new investment over the past several years, really wasn't a good one. More or less back to where they bought it. So if we were just sitting here doing everything Berkshire did, I guess my point is, I don't think the average investor would be that much better off, right? Following them in and out of all these things. They've been selling the banks for a while. They've been selling their energy holdings for a while, not Occidental, but the other ones. Now they're selling even more Apple. Now they have more cash than ever before. Guess what? They're going to keep having massive cash piles. Is it not every couple of years that we have to deal with these headlines about Berkshire having so much cash? This isn't new. This is not new, right? One of the largest companies in the world. They're literally in the business of buying financial assets. They hoard cash sometimes. I wouldn't overthink it.
Yeah. We are not Berkshire. Berkshire is not us, right? They have their own goal. But really what it comes down to is what I said, is they don't see a better use for the money right now. When they do,
I think
they will spend it.
Yeah.
They will invest it, right? It is that simple. So
I think that they got to make another big tech investment here. I wouldn't be surprised to see them make another big splash and maybe a different Mag 7 name. Why not, right? Now that they've kind of broken that no tech rule that people thought that they had, why not go crazy?
Well, it was a
Why
rule.
stop at Apple? What about Google? Why not Amazon for a guy like Warren Buffett? What's
Yeah,
wrong with business like
remember how
Amazon?
late in quotes Berkshire was to Apple? They've made an insane amount of money on that.
I'm saying
Right.
they can do that again in another one of these, massive names. And Amazon probably has the most attractive valuation.
Yeah, and JC is in our chat right now. Is saying, for all we know, we don't. Maybe they're buying something right now. We'll find out in 4 months, 5 months. We'll find out in we'll find out next year is the point, right?
Jesse does make a good point. So that filing that we just got was as of September 30th.
Right. So whatever they buy now, they don't have to disclose until the next 13F day, which is February 15th, right?
Yeah.
So 3 months from now. So
yeah, as of December.
there we go.
So listen, if it's something big enough, we'll see it. We'll see it in a 13.
Right.
So I like you said, Spencer, that cash pile won't be, at a historic level forever.
But also, like, if you're selling your stocks because you're mimicking, you're raising cash like Berkshire, waiting for the recession, I think you will be in for a bad time. Because they're not gonna announce, we're buying stocks now, everybody, time to buy. They're not gonna do that. So.
Hey, Spencer, you know what? I just had a thought too.
No.
Everybody's so obsessed with tracking Buffett and what he does. If you want it that bad, you could just buy Berkshire Hathaway shares. Right?
Fun fact.
Like, you have to follow
I did it.
Berkshire's buys and sells. Just buy Berkshire. You could do that in this case. Can't do that.
You could say, I too have a record cash pile. Should we? Jason Perez wants to chime in on this. I think.
Yeah, bring him on.
I think he has a take. So let's get him on here and let's talk about it. Where's my Jason Perez video? Jason Perez, where are you at, man? Do I have this thing somewhere? There it is.
The chat likes Amazon. Somebody's got to tell Warren. Amazon. I like it too. You like that, Jason?
I like Amazon. I own Amazon. I don't talk about my personal holdings, but there's some very boring stuff in the retirement account. It's been there for a long time. I've owned Microsoft for as long as I've had a retirement account.
Boring is better,
Mhm.
for the retirement account.
Altria.
Dude, Altria is like the ultimate boomer stock.
It is.
Are you kidding me? Name a more boomer stock than cigarettes.
It's
Can't.
such a great business.
Anyway,
It is a great business. That's a problem. It makes money. I don't know how anymore, but it does.
Jason, you have thoughts on this? I feel like you do. You were in the chat saying.
Yeah, absolutely. So I think it's funny you bring up Buffett. Now, once again, it's funny where people always kind of get into this. Oh, he knows everything because he's made a lot of money. And once again, it's like Spencer said earlier. This is not his business. Isn't timing. His business is putting cash aside, and like he always says, the idea of taking swings when it's time to take swings. And so being able to sit on his hands with lots of cash is what he does very well. He does that better than just about anybody else, but timing the market is not. Also, I wanted to bring up what happened with silver in 1997. So he ended up buying silver around $6-7 an ounce, accumulating was about 37% of the world's supply of silver, 130 million ounces, I think it was, something around that crazy number. And then he ends up selling it right before it takes off in 2005.
Yep.
So literally sells it for about the same price that he bought it for, because it went basically depressed for about 4 years. And then next thing you know, it breaks out, it goes all the way to 50, and he sold it back at 7. So it's not, once again, it's not making fun of it or hating on it. Nobody's a perfect trader. Everybody's made mistakes. Everybody's made bad trades. It's just when you're on that type of stage, it's a little bit more highlighted, but it mainly highlights the point. Don't listen to these people. Listen to people who are market timers. Listen to your own strategies, your own systems. Like, this will tell you what to do. Stay out of the media. The media will always tell you like it's time to sell and run for the hills because fear sells.
Even, and we're not like talking crap about Warren Buffett or Berkshire's moves, but like, it's just not a strategy at all. So the latest one that we keep seeing, Form 4s keep hitting the wire for Spencer, Sirius XM.
Yeah.
You look at this chart. I mean, this thing's a disaster. This is not something we would think about buying. Chart that looks like this, like for a while now. So I don't know. If you want to sit here and I guess blindly follow any investor into their 13F filings, I mean, that's just there's a bigger problem. It's not just about Berkshire. You pretty much don't want to do that with anybody. We have like a handful of investors that we will follow or give more weight to just because their holding periods are so long term. I guess Berkshire is one of those, but for the vast majority of them, something like these long short equity hedge funds, people are always covering like SAC Capital's moves and some of these Tiger Cubs. They're in and out of trades in an afternoon. Like,
yeah,
any snapshot that they send you as of September 30th, these are our holdings. That is like the most worthless filing you could ever imagine. Absolutely, like, it has nothing to do with what's going on today. I
followed Warren one time. Well, it wasn't the only reason why, but it was a big reason why I bought a stock, and I learned a great lesson, which is that I don't have the pain tolerance of Warren Buffett. I really don't. His is legendary, right? Mine is not.
We were at Stocktoberfest, and they were asking us when we finished our presentation, like, they were asking everybody a couple questions. So they mic you up, and they said, what was the first stock you ever bought? And I told the story. I bought this company. It was called Build Your Dreams. It was ticker symbol BYDDFPK. It was on the pink sheets. This was like 2007. And I bought it because this was Warren Buffett's EV, investment. So it was a electric vehicle maker based in China. I think I paid like $75 in commissions in and $75 out. Lost a ton of money on it over the course of maybe 2 years. He ended up holding it for like 15 years. It's been an absolute killer investment and still holds it. But like, again, that was my first experience with investing in stocks. And I tried to follow the greatest investor of all time into a trade that he absolutely nailed. And I still fucked it up, and paid a ton of commissions in and out of it. And bought a Chinese stock on the pink sheets. The first thing I bought. So, investing's hard. Even when you follow the greats.
Mine was Kraft Heinz. summer of 18,
Yeah.
$62, I think, somewhere around there, low to mid 60s.
Yeah.
Oops.
Oops.
It's the timing, right? Like market
Yeah.
timing is a very hard thing to do, and then not to mention the staying power, and that also comes with money. That's the other thing a lot of people don't talk about. Warren Buffett has a ton of money.
Yeah.
So there's a big difference with the new investor who has a few $1,000s to put into a trade, and when that few $1,000s gets wiped out, like they can't just sit on it. Warren Buffett has the staying power to sit on it. He also has the mental fortitude to sit on it. Like he has conviction in his ideas. And not to mention, he does, if you do look at his trades, he does have pain points where he does get out of trades. So if something was to change, he would be out. So there's a lot of things in there. But once again, you can't just follow these big guys and go, I'm going to do what they do, because they have a crazy different amount of money than you do.
They're playing a different game.
A very different game.
So can we talk about this Viking Therapeutics and Lilly situation? What was the news?
Oh.
Why are you rolling your eyes?
No, they got some news today. That's why I'm not rolling my eyes. They got news.
These stocks are moving on something new. So is this like the Parets trade? Is this the obvious move here? Long Viking, short Lilly and Novo?
It would appear to be. This is a so what is it? Oh, I didn't realize they were presenting at a conference called Obesity Week 2024. That's a great name for a conference.
Obesity Week. Wow.
That's a great name for a conference. Anyway, new phase 1 data out this morning. Phase 1. So keep that in mind. There are 3 phases. This is only phase 1. But it was good phase 1 data for their weight loss. It's a pill, I believe, and that's the big difference.
I mean, this is a hot stock, man. This VKTX. So yeah, there's a situation with the delivery method or delivery system for these obesity drugs, and from what I understand, Viking has a better way of getting people to take these drugs. Is it a pill? Sure.
Oh wait, there was wait. I'm sorry. They presented phase 1 and phase 2 data. What? Okay, I never. Yeah,
it at a conference. It wasn't like FDA news.
No. It was just presenting. But yes, they do have a pill form.
All right. Great. I like this Viking, man. It's a hot stock. A lot of biotechs are working. Finding more and more biotechs are breaking out every day.
And this is how you know. This is how you know that Steve loves the charts above all else, because he's been railing against Eli Lilly and even Novo for right. But he's not. You know, it's not like he is anti GLP-1. He's just anti those charts, right?
I'm anti GLP-1. I think it's crazy.
Yeah, but that's what Viking is though. So
yeah, I'll buy good charts. I think
so. There we go.
This is not a wonder drug, but yeah, I'll
run
this thing all day. Absolutely.
Yeah, okay, that's right.
And Novo, that's just a top at this point. So like we've been long Lilly like the whole way up for years now. But we've been watching these and waiting for these trends to kind of roll over. They've been losing momentum for a long time, but we're getting like these monthly momentum crossovers. The momentum just on the RSI 14 looks nasty. If you look at NVO, so Novo Nordisk, also in the GLP-1, part of the GLP-1 story, I guess, with Lilly, that's a clean top. Below 120, you could short that all day. I think these are tough stocks to short, though. Right? These are such big story stocks. It's like, this is one of those situations for me, Jason, where it's like, do I even need to get involved? You know what I mean? Do I even want to be on either side of this crazy thing? But I do think a lot of air comes out of this when the party stops.
Not until it gets past some major levels. I think that's the thing that you always just have to look at with stocks like this is it past major levels? And I like what you guys talked about earlier, which is, you know, no matter what, the charts will always override everything, every feeling, every emotion. And I think that's important for people who really, if we look at the charts and we say we're technicians, we really have to follow it. I've talked to so many people who go, man, how do you trade all these different products? I'm like, they're all the same. The price action is exactly the same in all of them. Sure, commodities tend to V top a little more and stocks tend to V bottom a little bit more, but that's about it, characteristic wise. And everybody hates that idea, but it's the truth. The price is the price, and it tells the truth.
You know, Jason, were you listening to what JC was saying about currencies earlier? Did you hear this?
I didn't catch it.
So US dollar I mean, maybe it's just our bullish bias, but are we on rollover alert here?
Um, I think the dollar is probably headed lower, right? I think that's probably going to happen at some point soon. I think that once again we're stuck in this range. And as long as we're stuck in this range, we really don't know anything. And I think that's the thing that so many people kind of get stuck on, which is, oh, it's going up, it's going down. Really, it's been in a range. And a range bound dollar is good for a lot of assets, but a down dollar would be even better for a lot of assets. So
Yeah.
really for me, once we break that 100 level, but also my bias is still to the downside because we never made a new 52-week high. We continue to hold that 52-week low. I do think we probably will head lower soon, but I think the election is this is what I really like about elections, and everybody will have opinions about it one way or the other. Really, the election will tell us one thing. It will tell us that when we have this election and it's over, most of these ranges like the dollar, like the Nasdaq, all these ranges will be broken one way or another. Either we get to the top side of this one in the Nasdaq and it just reverses, which I really doubt, or probably I think the Nasdaq is going to hit all-time highs and continue higher. Same with the dollar. The dollar is showing today a lot of weakness. Maybe that follows through the election. So I think a lot of these ranges will resolve, and we just have to wait a week. I actually brought a couple charts on a couple ranges now that I think about it. One is the lumber. There's a lumber chart, and then there's also a copper chart, the one Sam made. So there's a lot of these ranges that are kind of telling us something. And lumber, yes, it's not something that a lot of people trade, even though the LBR contract is actually very liquid now. But it tells us a lot about what's going on with the market. If there's liquidity coming in the market, if there's growth coming into the market. And now we're seeing that kind of finally tick up. Now, this is a great chart. This thing is just a head and shoulders bottom with a band squeeze flag pattern. It's actually also above the 200-day moving average, and it had a band squeeze breakout. I mean, everything you want in a chart to buy something is here.
Look at that coil, man. That's great.
Yeah. That's an amazing coil. One of the best patterns I've ever found to use is band squeeze breakouts. So many people hate buying big breakouts. So a different way to look at breakouts is find a band squeeze breakout, something like this, where it tightens up and then it moves a specific direction, hits the top of the band, and then boom, you have a band squeeze buy signal. And so you buy this thing, and it's already trending up. It looks really good. Copper looks very similar. Another one that's also trending up, looks really good. I think a lot of these are just kind of saying, hey, this market is probably moving to the upside instead of the downside. Now today, copper finally just moved out of this range, got back over that 200. What do you say, Steve? Yeah, it's a beautiful chart. Yeah. And so if you look at this, the PPO, it's about to cross. It might have even crossed today. So if you look at all of these, what does copper and lumber have in common? Well, these are things that we use in the global economy, and they show us when the global economy is growing or slowing. Right now, I think is a great time to look at it and go, okay, well, if both of these are moving higher, I would say that stocks will probably move higher, especially after the election. And so altogether, I'm thinking my thesis is very bullish here for growth-based commodities like copper and lumber, and markets like, industrials, copper miners, gold miners. All these things look really good here.
I was just looking at the XME chart. These ranges have been not just in place, for many months, but if you zoom way out on XME, SLX, copper, COPX, just for years, just sideways, massive consolidations. And, I don't know if they're ready right now. I like what you're saying, but eventually these bases are going to go. And when they do, I mean, these are charts that you just have to buy every time.
They look explosive. Like, that's the thing about it. They look explosive. And that's the thing that, like, for me trading, if I'm looking at things and I want to buy these massive breakouts, I want to see a base that looks like that. I want to see a long-term base, a squeeze pattern, and I want to see the underlying commodities start to move as well. And so now that we're seeing this uptick in copper and lumber, and now those sectors could possibly move as well. Companies that do paper, like International Paper, Weyerhaeuser, these things could also do very well in that type of an environment. So there's a lot of things that could do well in that environment. So I think what's going to be interesting after the election is this going to be a growth-based trade that comes after the election, or more of a broad, hey, we're seeing industrials? Because a lot of people, I mean, even technology can go up in that environment. And we might see things like software start to move. Like in 2021, software did very well, where the rest of technology didn't do quite as well. So I think there's a lot of places to look for right now for a lot of opportunities in the market, places that people aren't paying attention to at the moment.
I got to see these ranges break out. Here, I want to throw up some charts before we get out of here. Do you have these charts ready, Alfonso? We've been talking about these ranges all day. Here's XME, right? So here's the metals and mining one that we talked about. You know, Jason, it's an interesting, I guess, you just talked about a MACD crossing up and getting a bullish signal on copper. If you look at copper stocks or these metals and mining stocks, which is a lot of copper in here, we're getting a MACD sell signal at the upper bounds of a range. Looks like a failed breakout. I would look at a chart like this and say, it needs more time, right? 2 weeks ago, look where it's going. Throw up the banks. The banks, like if we just stick with this cyclical steam right now, here's another range that I thought, man, this is going to go. They're going to front run this thing ahead of the election. Looked good. It went higher from a range back in the summer, but then it's been straight sideways again. It's like these banks, they just can't get it going. A couple weeks ago, looked like we were breaking out. Now back in the box, you have a nasty potential momentum divergence there. If you look at something like ARK too, this is the flagship ARK fund, ARK Innovation Fund. Tried to get out of this range. You could draw this like a year-long thing. Just a long-term consolidation here. Still hasn't really even resolved higher from a primary trend reversal pattern like so many other areas. Poked its head out of this range last week, failed miserably, back into the box. Look at something like this, the momentum regime. This is terrible, right? This is not bull market momentum right there. If you look at Russell 2000, same thing. It's just like, it's not even waning momentum. It's just like, there's nothing there. We're not even getting overbought. Right, so the Russell tried to resolve higher from this multi-month range. Couldn't even get overbought on the attempt, back into the box. So there's just a lot of charts that look like this. I heard Larry on the interview. He said, Steve was sounding cautious. Not even cautious. It's just like, the market's good, but it's not great. Like we didn't stick these moves. So is the election the catalyst to break these, ranges out finally?
So
Probably.
that's the point of earlier.
Probably.
Yeah,
it hasn't happened yet.
That's the point I was bringing up earlier, and that's well said, which is the election is the catalyst. One way or the other, we'll know the truth. And I think that's a hard thing for traders to do, is sit on your hands and wait for the election to happen and then follow it. People don't want to do that. They want to buy today. But really, the safe trade is exactly what you just said, because look at all those ranges. These things are either at make or break points. They're not at a point where I could say, hey, they're going to go up or they're going to go down. Once they break out, though, I would absolutely chase it. I think the small caps will be a great area if it breaks out. Same with small regional banks. Same with the XME. But you have to wait for these ranges to resolve.
We put a trade on biotechs last week.
There's things that are moving, and there are things to front run. Biotech is one of those. You look at the band squeeze, the implied volatility of that move has dropped so much. Buying options in something like that would be a great trade. I mean, all of these things have those options set up right now, where it's like you could buy options in most of these, hedge your downside risk, and that would probably be the safest way to jump into the election trade.
Yeah. All right, Spencer. Recess.
Yeah, let's do that. Then we'll get out of here.
Maybe. What do you guys got?
I'll save my other one for tomorrow. I just want to do a quick PSA. If you want to get all the charts that we share on the morning show, you can do that. What?
Getthecharts.com.
Well, no, that would be a different thing. But I'm going to put a QR code on the screen right now. This QR code over my face. Scan that code. That's the Stock Market TV Daily Rundown. It's actually 2 emails every day. One in the morning from me with the charts from the show. One in the afternoon from Alfonso with his chart of the day. I recommend you get this if you want to get our charts that we talk about every morning on the show. Scan the code also in the description on YouTube. The link is in there. So if you don't want to scan the QR code, totally fine. Go in the description, click on the link where it says Stock Market TV Daily Rundown. Get the charts from the show. That's all I have. I'm done.
I really have nothing.
Steve, big night for you tonight.
Yeah.
It's the return of college basketball.
Oh yeah, that is tonight. You're right. You're right. So that's a great recess. Go Huskies.
Well, I
and
did tell Sam about he didn't know. So Joel Embiid's Sam's favorite basketball player. Obviously,
such a-
Sam looks
really
just
such a
like
great
Joel
guy.
Embiid.
Yeah, unbelievable.
But I told him today the story. I said, "Do you know how Joel Embiid learned how to shoot?" And he said, "No." I said he used to Google how white guys shoot jumpers. And so I sent him the video today about how Joel Embiid looking up how white guys shoot jumpers, and it was pretty funny.
That's pretty awesome because he's a great shooter for a big man, right?
Yeah, what I mean, if you ever go to the gym, you know, you run into that one white guy sniper that you're like, oh, that dude probably doesn't play much, and then he just starts putting up threes, and you're like, oh. And not to mention, I have another friend who can't shoot at all, but he's like, I just lean into the stereotype. I just pull up first time I get the ball, I pull up, and then everybody runs at me every single time, and then I drive the rest of the game.
Shout out Cam Spencer.
All right.
Let's get out of here.
What do we have? Chart Request Live at 1 o'clock. We'll see you guys there. Smash the like. Thanks, Larry. Thanks, Jason. Thanks, Kenny. Thanks all y'all in the chat. Go make some money, all right?
Happy Monday.